that you enjoyed that strategy session. Do bear in mind, obviously, you can go back and view all the charts utilized in the strategy session within the previous last couple of slides, as well as obviously the full video caption. You can watch that through in its entirety. So let's then move on and complete the template. Now, by now, this is obviously the third template we've completed. You're starting to get the hang of what's expected of you when filling in these templates. So let's get straight into it. Obviously, in terms of market context, one of the most important things we spoke about in the strategy was identifying what makes a good break. Okay, in order for us to have a failed break of support and resistance, we actually have to first identify when there is a break. Okay, and we spoke a lot about support and resistance, how we can identify what key support and resistance is. We spoke a lot about the low volume area and the potential for single prints and imbalances to be left once we have that break. We then also mentioned a real pocket of low volume area from the breakout that needs to be filled out in a consolidatory manner. So the takeaway, and this is really key in terms of observing the strategy, is it's a really patient initial part of the strategy. Okay. With that in mind, in terms of trending, consolidating, well, ideally we want to see trend on the break, we want to see initiative, and then obviously consolidation on the retest. So once we do come back, we want to see quite a bit of two-way trade before we then re-enter range and aggressively reverse. Ideally, big trend moves or initiative moves do tend to be a little bit stronger when markets are in imbalanced as opposed to balanced. And in terms of trade location, we spoke a lot about where we can find key support and resistance, and we spoke a lot about some of the important metrics to focus on to identify a key break, and they were volume, speed, delta, a low volume area, or imbalance. Now going forward, don't be afraid to shorthand text. You'll see I utilize the shorthand text of LVA quite a lot, or imbalance, IMBA, L. Don't be afraid to shorthand text. Okay, LVA just simply means low volume area. Imbalance means imbalance. So you learn to utilize and get through these observations with relative ease. Okay, in terms of market conditioning, the types of time frame participants, well, ideally we need initiative. We need all the participants on the break. That's what creates the heightened volume and aggressive nature of the break. Then obviously once we get the unwind, do note it's not so much the longer time frame participants, but rather the short term and speculative participants. Note those speculative participants include algorithms as well as obviously your speculative participants. Now in terms of liquidity, do note it will be relatively low on the breakout for obvious reasons. If everyone's in agreement, nobody should be offering liquidity on the opposite side. Obviously, we spoke a lot about, in terms of volatility, it should be volatile on the break higher until such a point, it finds responsive either sellers or buys, depending on the direction of the break, at which point it should consolidate before beginning the process of drifting lower. Let's now move on and have a look at the strategy identification. So again, obviously, as the footprint tool is an interaction tool, this is quite a crucial part of the template. In terms of the type of interaction we expect to see, well, we would expect to see a lot of initiative from the break, some real aggressive pocket positioning, a lot of absorption, heavy absorption, until such a point as the breakout finds some sort of response on the other side of the market. When we see those dark deltas coming in on the other side, we know we found some liquidity, and that should show us potentially where the breakout is coming to a potential pause. Now, do note, obviously, in terms of once we do come back, we do expect to see not necessarily an initiative leg taken once we re-enter the previous range. It's more of a stop run, and that's crucial to understand, because the difference is, if we had an initiative leg lower, one, it wouldn't be driven by the participants of just the algorithms and the speculative. It would be all three participants, including influential participants. So that's key. We will talk a lot about that in the strategy unit on initiative drives. So do note, initiative requires someone with influence, which is a relatively large time frame participant. So Do note what that means obviously is initiative doesn't always have to reverse. Stops and stop runs, as is this example, they can potentially and very easily and often do reverse and fill out. Okay, in terms of then obviously the passive aggressive nature of the interaction, aggressive on the break and reversal, passive in filling out the low volume area. We spoke a lot about that. Be patient when the market's filling out a breakpoint. It can take a couple of hours to fill it out before beginning the process of the unwind. Okay, then in terms of the key metrics, volume relatively high. You will see that in the relatively dark colors in the summary box. Do note, obviously, the longer it fails to continue with a break, the higher the probability of failure. So once we've broken and we've extended on the breakout, the longer the market fails to then extend and continue in the direction of the break, the more likely for this potential trade strategy to become valid. Do note, obviously, this trade strategy only becomes valid at such a point that we actually do retest the previous breakpoint. Okay, so that's crucial to understand. There is no trade strategy until we retest the breakpoint. Okay. In terms of delta, it should go in the direction of the trend as well as the cumulative delta, and obviously in terms of relative change, you should see a lot of shifts in volume and delta on the breaks and the reversals as well as in the price. So again, observe what is price doing on the initial break as well as the flush down, what price is doing when we get the initial trend like move up or down, and then obviously when we get the stop run in either direction, what does the price action and the volume and the delta do in that instance. Now we're going to talk a little bit about the execution part of the template in the next slide. So in terms of execution, some of the things we're going to pay attention to, again, do we want to be passive or aggressive? We can afford to be quite passive in this instance, as obviously we're waiting for that consolidatory zone around the original breakout zone. Okay, we did show you a great example there of how the market spent quite a bit of time auctioning around the breakout point before then obviously moving quite aggressively lower. Note, stop placement, you want to put it in and around behind ultimately where that consolidation period is occurring within the breakout zone. In terms of target, we're looking for either an unwind of the delta or the stop run, which creates an exhaustive low, or ultimately an extension of the low or a test of the lows. And whichever one of those three comes first, that's your potential target. Do keep in mind, obviously, like I mentioned, because we are stopping down rather than initiating down, once the market does find that response after having the flush out, we are likely to see a very aggressive reversal, just simply because stop areas do tend to get retested and filled out. Okay, in terms of risk reward, very high obviously for good reason. We are going to be taking a target of at least 50% of the day's range. So with a very limited stop, it does give us good risk reward metrics. In terms of the application, it's exact. We wait for that absorption on the retest and then we simply execute. Leveraging, yes, definitely. In this instance, we will. We only, however, leverage in the instance that we get the clue. So if we get that absorption, we enter in once. And then just before the break below that consolidatory zone, as we spoke about in an example, we add on the second leveraged position. Okay, our tip, use color lines for key breakouts. Okay, because this is a patient trade strategy, it might come later on in the session. You might be a little bit switched off, not recognizing what had happened early in the session, and you might miss out on this opportunity. So it's one of those where the color lines can be really helpful. And remember, a key breakout can ultimately reverse. All right, guys, let's then move on and we can talk about our next piece of additional reading. Now, again, in the next of our additional reading, a fantastic book, quite a new book, came out in 2017. It's A Man for All Markets. It's written by Edward O. Thorp, and he's a financial guru, effectively, with real practical experience and war stories. Now, I really do appreciate listening and gaining experience off of people with real stories, real war stories, people with real experiences that have kind of done what we have done and gone through some of the real difficulties that we do go through as traders. And that's why I think a lot of you will be able to associate with this book. Not only that, but it moves away from the real serious nitty-gritty of the trade strategies, etc., and really creates a nice hope type situation where you can truly believe that trading isn't in essence just clicking by buying and selling. Okay, it's a lot more than that. It's about taking advantage of opportunities. That's what in essence we're doing, guys. We take advantage of opportunities. So it's a true story, which is great, of the life and achievements of Edward. And he had very humble beginnings, which again a lot of you can probably relate to, and most of you want to make a success. You want financial freedom. So again, because you can relate to it, because it's a true story, it will sit very close to a lot of you, and that's why I recommend this book. It does involve Las Vegas, obviously, so it does make it exciting. If you are a trader by nature, you like to gamble, so it will be quite entertaining in that sense. In terms of the action taken, it will create self-belief as well as a sense of real motivation. Key highlights: self-taught through a few books he was. So again, a lot of you can relate to that. Okay, you haven't had the easiest upbringing necessarily, and that's really cool because neither did Edward. Note, obviously, you can learn through the process of trial and error. Again, you're going to see this this highlight crop up in pretty much every one of the 10 books I'm going to share with you. It's all about trial and error, or better known as tinkering. Then realization that investing isn't always in the traditional sense of, buy value or, buy the breakout, etc., etc. It's got more to do with opportunity. And that's why, as a little secret, I'm not going to give it all away, but when we get to the bonus section, we are going to focus a little bit more on the latest craze of Bitcoin. Then in terms of, obviously, the last highlight is he does give really good, humble investment advice. Okay, let's now wrap up, talk about the drills, and finish out Unit 8. Okay, just like the last 2 units, obviously, we've got our drill session. Go through the drill, watch the entire drill, make some notes while you're watching through it, some key observations. Once you've watched the entire drill on its own, do go and fill out a template, okay? Again, you're going to be tempted to go watch the guided tuition straight away. Don't do, right? It's really going to be far more helpful if you try and learn through your own, attempt rather than just going straight to the guided tuition. Obviously, once you have watched through it, go compare or go and watch the guided tuition, compare some notes, make additional notes, but complete the template. Once you've done that, obviously, you can go back through these slides and watch over the other drills that we utilized within the unit, and you can then, once you do that, go and complete another template. Remember, the more templates you complete, the better you're going to get it, the quicker you're going to get it, the quicker you're going to learn the habit, and the better you're going to become at ultimately completing a processed approach. Okay, once you're happy with all that and you're confident in your understanding of the strategy and your application, you can then move on to the next unit. Now, before we move on to the end of the unit, real skills are developed through endless errors. That is a summary of this entire course. It's a philosophy I believe to be probably one of the three most important philosophies, not just in trading but in life. Okay, it's through trial and error that we're ultimately going to become better versions of ourselves, better traders, and more effective. Okay, guys, good luck, and I'll see you guys in Unit 9.